Welcome to Smart Stock Watch, your go-to channel for in-depth financial analysis. Today is November 4th, 2025, and we're diving into Sterling's latest earnings report. Joining us is John, a senior analyst from Smart Stock Watch. John, thanks for being here.
Thank you for having me. Sterling has just released their third quarter 2025 results, and it's quite an impressive report. I'm excited to break it down with you.
Revenue and profitability overview. Let's start with the top line. Sterling reported revenues of $689 million for the third quarter, marking a 32% increase when excluding the RHB joint venture. John, what are the key drivers behind this growth?
Absolutely. The revenue growth was primarily driven by a 58% increase in e-infrastructure solutions and a 10% rise in transportation solutions. The acquisition of CEC also contributed $41.4 million to the revenue this quarter. This strong performance translated into a net income of $92.1 million, or $2.97 per diluted share, setting a new third-quarter record for the company.
And how did this impact their profitability?
Well, Sterling's adjusted earnings per share came in at 3.48, significantly surpassing the analyst's forecast of 2.65. This reflects a 58% increase in adjusted net income, showcasing their effective cost management and operational efficiencies.
Operational efficiencies and future outlook. John, Sterling's gross margin improved to 24.7% from 21.9% last year. What does this tell us about their operational efficiencies?
The improvement in gross margin is a testament to Sterling's strategic shift towards higher-margin service offerings. Their adjusted EBITDA also saw a 47% increase, reaching $155.8 million. This indicates that the company is not only growing its top line, but also enhancing its profitability through better cost management.
Looking ahead, how does their backlog position them for future growth?
Sterling's backlog at the end of the quarter was $2.58 billion, with a combined backlog of $3.44 billion. This robust backlog, bolstered by the CEC acquisition, provides strong visibility into future revenue streams and positions them well for continued growth.
CEO insights and strategic initiatives. CEO Joe Cutillo highlighted some strategic initiatives in the earnings call. Can you elaborate on these?
Certainly. Joe Cutillo emphasized the 58% growth in e-infrastructure solutions, driven by large, mission-critical projects like data centers and manufacturing facilities. He also noted a 10% growth in transportation solutions, despite a strategic downsizing in their Texas heavy highway business. However, building solutions saw a slight decline of 1%, due to the housing market slowdown.
How does the CEO view the company's future prospects?
Mr. Cutillo is optimistic about Sterling's future, raising their full-year guidance to reflect strong year-to-date performance. He expects 2025 to be another record year, with significant growth in revenue, adjusted EPS, and EBITDA.
EPS forecast and analyst expectations. John, analysts had forecasted an EPS of $2.65 for Sterling, but the company reported an adjusted EPS of $3.48. What does this mean for investors?
This is a significant beat, with Sterling exceeding expectations by 83 cents per share. Such a performance not only highlights the company's strong operational execution, but also boosts investor confidence. With only 2 analysts covering the stock, this beat could attract more attention from the investment community.
What should investors take away from this EPS beat?
Investors should view this as a positive indicator of Sterling's ability to deliver strong financial results, even in a challenging market environment. It underscores the effectiveness of their strategic initiatives and positions them well for future growth.
Key takeaways. In summary, Sterling has delivered an outstanding third quarter with record revenues and earnings. Their strategic focus on high-margin projects and effective cost management has paid off, resulting in a significant EPS beat. John, any final thoughts?
Sterling's performance this quarter is a testament to their strong execution and strategic vision. With a robust backlog and increased guidance, they are well-positioned for continued growth. Investors should keep an eye on their progress in the coming quarters.
Thank you, John, for your insights. And thank you to our viewers for tuning in. If you found this analysis helpful, please like, share, and subscribe to Smart Stock Watch. We'd love to hear your thoughts on Sterling's performance in the comments below. Until next time.